Good day, Junior Techies. I'm Mrs. Brimacombe. We're now going to look at manufacturing activity 5. 5.1 Ledger account and cost calculations. Smart jacket manufacturers. You're provided with the information relating to smart jacket manufacturers for the year ended 31 October 2022. The business uses a markup of 40% on cost. The business is owned by partner Harry Bloom and Jabu Mabule. This means that the form of ownership is a partnership. The type of business, manufacturing business. Required, calculate the correct factory overhead cost. Calculate the raw materials issued for production. Number 3, prepare the following ledger accounts in the general ledger for the year ended 31 October 2022. Work in process stock account, the finished goods stock account. Now throughout all the activities we've looked at those two stock accounts specifically, but now we're going to add the trading account and the profit and loss account. And this is why it's important to take note. They said that the form of ownership is a partnership. It's owned by partner Harry Bloom and Jabu Mabulu. Because you need to remember now, when we're doing closing transfers, from the profit and loss account, where do we take the net profit that we calculated in a partnership? So question 5.1.1 is to calculate the correct factory overhead cost. It means that the factory cost, overhead cost has been calculated, but now we need to correct that. So while we're going to complete 5.1.1, we are also going to look at the profit and loss account, because you should know, in a manufacturing business, administration cost and selling and distribution cost is closed off to the profit and loss account. So if we're making corrections, it means that we will need to adjust those costs as well. So we are going to start by looking at those costs while we're completing question 5.1.1 to see if there's a correction that we need to make in the factory overhead cost, in the administration cost, and in the selling distribution cost. We're doing it at exactly the same time. So this is why our step number 1 is we're going to write the cost which was calculated so that we now can adjust those. The first adjustment, bad debts written off 22,500 were incorrectly recorded as factory overhead cost. Remember that bad debts has to do with your selling and distribution cost. So this has now been incorrectly added to the factory overhead cost, which means we will need to take it out, and to take it out, we'll need to subtract it so that it can be added to the selling and distribution cost. Water and electricity amounts to 98,000. 75% of water and electricity must be allocated to the factory. The balance must be distributed equally between the office and the sales department. The entire amount was added to the factory department, which means that that full 98,000 was allocated to factory overhead cost. It should have only been 25%. The balance, 75%. The balance, 25%, must be distributed equally between the office and the sales department. So starting with the factory overhead cost with the water and electricity, 98,000 times 75% means that 73,500 should have been allocated to the factory overhead cost. Instead, 98,000 was allocated. So we have overstated the amount by 24,500, which means we're only going to take out 24,500. Remember, the factory overhead cost has been calculated. The water and electricity has been added, but the amount was overstated because it should have been 75% and not 100%. So please take note the difference between the previous activity and this activity when we're correcting the factory overhead cost. So now what needs to happen with the administration and the selling and distribution. 98,000 times 25% equals 24,500, which should be distributed equally between the between the selling and distribution and the administration department. This means that we will need to add 12,250 to administration and to the selling and distribution cost. The insurance of 42,500 was divided equally between the factory overhead cost and the admin department in error. 60% of this expense relates to the factory and the balance applies to the admin department. So what is happening here now? If we're looking at insurance in our factory overhead cost, 42,500 was divided equally, which means that 21,250 was allocated for insurance in the factory overhead cost. But this was done incorrectly. It should have been 60%, which means the amount should be 25,500 instead of 21,250. Now we have actually understated the amount, which means that we need to just add the difference so that we can make the correction. So 4,250 must be added. If we look now at the administration, with my administration, 42,500 times 40% means that 17,000 should have been allocated to the administration. So in this case, we have now overstated the amount because we've allocated 21,250. It should be 17,000. So the difference, 4,250, must now be subtracted from the administration cost. Now that we've done all the corrections, we can calculate the correct not net profit, the correct factory overhead cost. We can do the same with the administration cost, close the brackets, and also the selling and distribution cost. In this type of question, in a test and an exam, make sure that you show your calculations in brackets. Question 5.1.2, calculate the value of raw materials issued for production. To calculate the raw materials issued for production, they didn't ask you to do specific ledger accounts. So again, how you approach it is really up to you. I prefer doing a T account, knowing that if I want to calculate the raw materials issued, I need to open up the raw materials stock account. And I'm going to start by writing down the information which is given to me. They provided the raw materials balance in the beginning, 82,500. The raw materials at the end is a question mark. Then it says that the material cost 110 Rand per meter. This remained constant throughout the year. 15,800 meters of materials were bought during the year. So this means that we've purchased 15,800 meters at 110 Rand per meter. So the total purchase price we need to calculate 1,738,000. 250 meters were returned to the supplier due to inferior quality, which means that returns, it's going to decrease our raw material stock balance or stock account. On the credit side, I'm going to have 250 times 110, which means the returns were 27,500. Then it says there are 600 meters left at the end of the year, which means that 600 times 110 means that the value of our raw material stock left over is 66,000. Now the balancing figure becomes the raw materials which was issued to the factory. So we take the debit side minus the credit side. That becomes the balancing figure. So 15,700 meters were issued at 110 Rand per meter. My work in process stock account, we always have on the debit side, the balance brought down. They provided it to me 80,000. This account will always have direct material cost, direct labor cost, factory overhead cost on the debit side. On the credit side, we have the balance carried down. And what do we calculate? The cost of finished goods produced, which is taken to the finished goods stock account. So if I look at what else have they provided me with, they provided to me the work in process at the end, which means that the balance brought down is 40,000 and the balance carried down is 40,000. In question number 1, we completed calculating the correct factory overhead cost. So this is our next step. We can complete the total factory overhead cost. Again, ensure you use your answers that you've calculated in your previous questions. We've calculated the raw materials that was issued. Raw materials issued is an expense. An expense in a manufacturing business is closer to the cost account. The cost account is direct material cost. So we can say direct material cost, we've calculated, when we calculated the raw materials issued, 1,727,000. So now I still have direct material cost and the finished goods stock amount figure missing, which means the next step is to complete the finished goods stock account. My finished goods stock account would always have the balance in the beginning plus the total cost of goods manufactured during this year, which we calculated in the work in process stock account, the balance at the end, and what do we calculate? The cost of sales. So now we need to look at what information was given to us. They said to us, finished goods, 40 jackets, and 80 jackets at the end of this year. And number E, during the year, 3,920 jackets were produced at a cost of 850 per unit. The business uses a markup of 40% on cost, which means now, if we've produced 3,920 jackets at a cost of 850, we're going to take 3,920 times 850 to find the cost of finished goods produced this year. For every debit, there's a credit. This means now that my direct labor cost becomes the balancing figure. Take the credit side minus the debit side to find out your direct material cost. Now we can complete the finished goods stock account. They said in the beginning, we had a balance of 40 jackets. At the end, we had a balance of 80 jackets. This means 40 plus 3,920 minus 80, which was left over, the cost of sales, the number of jackets that we sold, was 3,818. If we work out the amount, take 40 times 850 equals 34,000. The balance at the end, 80 times 850, balance brought down means balance carried down. So this means cost of sales becomes the balancing figure, the debit side minus the credit side, and that equals our cost of sales. Completing now the trading account and the profit and loss account. My trading account, on the credit side, I would always have sales, and on the debit side, cost of sales. Sales minus cost of sales equals the gross profit, which is taken to the profit and loss account. So these are the basic steps that you've learned since grade 10. To find out now the sales, 850 was the cost. The markup was 40%. So to find the selling price per unit, you're going to take 850 times 140 divided by 100 to get the selling price per unit. The number of units that were sold, which we calculated in the finished goods stock account, was 3,880. So times that by the selling price per unit equals my total sales. We've calculated the cost of sales in the finished goods stock account. For every credit, there's a debit. This means we can calculate our gross profit, take the credit side in the trading account, minus the cost of sales on the debit side. This becomes the balancing figure, which is taken to the profit and loss account. We've already calculated the administration cost and the selling and distribution cost, which means now we can calculate the net profit. Because this is a partnership, this is closed off to the appropriation account. Activity 5 consists out of 2 questions. 5.2 focuses now on unit cost calculations. Ted manufacturers. The business manufactures teddy bears. The owner, Duma Front, has compared the profit she earned for the past 2 years. The business is located in Pretoria. 5.2.1 identify which variable cost was not well controlled. Note that the inflation rate is 7.5%. Quote figures and give a solution for the problem identified. 5.2.2 provide a calculation to prove that the break-even point is correct in 2022. Number 3, comment on the break-even point and level of production for teddy bears. Quote figures. Number 4, the total factory overhead cost increased, but the unit cost decreased. Explain why the fixed cost per unit decreased. And then number 5.2.5, the owner feels that they're not making enough profit. They plan to import cheaper material from India instead of supporting the local suppliers. They intend to maintain their selling price. So we're going to look at all of these questions now individually. Starting with 5.2.1. Identify which variable cost was not well controlled. So when you get this type of question, we need to look at the variable cost and compare last year with this year. And we need to see which one was not well controlled. So we start by looking at direct material cost to find out the percentage by how much it actually increased. If it decreased, that is a positive. We want to see which ones was not well controlled. So if I look at direct material cost, the difference divided by the 2021 figure, which is 21 Rand 15, means that the direct material cost increased by 6.4%. Direct labor cost, 18 Rand 20 minus 16 Rand 24 divided by 16.24 means that the direct labor cost increased by 12.1%. Then we look at selling and distribution cost, 8 Rand 10 minus 6 Rand 24 divided by 624 times 100 means it increased by 29.8%. So remember, the question says which ones was not well controlled. And then they specifically said there, note that the inflation rate is 7.5%. This means that looking at these options, direct material cost, direct labor cost, selling and distribution cost, considering that inflation is 7.5%, the direct material costs only increased by 6.4%, which means that we've done well to manage that cost. So the two, which is a problem, is direct labor cost and selling and distribution cost. So now we need to make sure, you need to make sure that you quote figures. Your direct labor cost increased by 1 Rand 96, which is 12.1%. Employees received an increase above inflation. Advise, monitor the overtime, set targets, ensure workers are trained to improve efficiency, give employees salary increases in line with the inflation rate. If we're looking at the selling and distribution cost, it increased by R1.86, which is 29.8%. Advice: monitor advertising to sales, delivery cost, decrease commission on sales. These are just some advice which you can give. So when you're looking at advice with this specifically, think about what forms part of the selling and distribution cost and how we can manage those expenses. Provide a calculation to prove the break-even point. So this is another way of asking the break-even point. So all we need to do is we need to calculate the break-even point, which has already been given to you, by taking your total fixed cost divided by the selling price per unit minus the variable cost per unit. Selling price per unit minus variable cost per unit is my contribution per unit. Remember that. This means that my break-even point is 141,570,2 units. We round up, which means 141,571, which means that we have proven that the break-even point is correct. Number 3, comment on the break-even point and the level of production of teddy bears, quote figures. So again, when we're commenting on this, we compare the break-even point from last year to this year. We compare the number of units produced and sold last year to this year. And then we also compare the break-even point with the total numbers produced and sold for each year to see if we made a profit or a loss. Are we breaking even? Are we covering our cost? So if we look at the break-even point, it increased from 133,854 units in 2021 to 141,571 units in 2022. So the break-even increased by 7,717 units, which is 5.8%. If we're looking at the number of units produced and sold, it increased from 140,000 to 150,000. So there's an increase of 10,000, which is 7.1%. If we compare the break-even point with the number of units produced and sold for each year, in 2021, the number of units produced and sold exceeded the break-even point by 6,146 units, which means that we made a profit. In 2022, the total number of units produced and sold exceeded the break-even point by 8,429 units. So there's an increase from last year to this year. If we're looking at the profit, remember, to get the profit that the business made, take the contribution per unit and times it by the number of units, the difference between those two. This means that our profit increased from 149,778.02 cents to 203,981.18. So remember, when we're commenting on the break-even point and the number of units produced and sold, compare the break-even point from last year to this year, the number of units produced and sold last year to this year, and then we compare the break-even point with the total units produced and sold. 5.2.4, the total factory overhead costs increased, but the unit cost decreased. Explain why the fixed cost per unit decreased. So if we're looking at this now, there's my fixed cost. From last year to this year, it increased. But if we're looking at the unit cost actually decreased. And the reason for that, if we look at the number of units produced and sold, it increased by 10 150,000 units. So this is what we call economies of scales. The number of units produced increased from 140,000 units to 150,000. Factory overhead cost is regarded as a fixed cost and remains constant while the contribution increases. An increase in production will therefore cause the unit cost to decrease. So this is an important term to understand. Question 5.2.5. The owner feels that they are not making enough profit. They plan to import cheaper material from India instead of supporting the local suppliers. They intend to maintain their selling price. So, what should Duma consider before importing materials from India? And give reasons why the business should support the local suppliers. So if we look at first, what should Duma consider before importing materials from India? Import duties must be paid. If he's buying now from local suppliers in Pretoria or even in South Africa, you don't need to pay import duties. Prices will depend now on the exchange rate. Transport cost will increase. Is the material the same quality material and not inferior quality? If it is inferior quality, you might lose customers. Although the material might be cheaper, Duma will need to consider if the additional cost will increase his direct material cost. So these are things that he needs to look at before he just decides to buy materials from India, from overseas. If we look at give reasons why the business should support local suppliers, there's no import charges will be paid, prices are more stable, prices will not be influenced or by fluctuations in the exchange rate. It will create more employment opportunities to people from the country. No delays in the case of emergency orders or returns, more convenient to transport goods. Money stays in the country, it improves the exchange rate, less crime if employment increases, goodwill in the community. So this is just reasons why we should rather support local suppliers instead of just buying from overseas, importing goods. We are now done with chapter 5 on we are now done with manufacturing. In grade 12, we'll be adding to what you've learned in grade 11. In grade 12, the focus is on a production cost statement, completing an abridged income statement or statement of comprehensive income. So make sure in grade 11 that you understand the basics of manufacturing, because you're going to do the same in grade 12, but we're just going to add more to it. I want to leave you with this quote: success doesn't come to you, you've got to go to it. I hope you have a wonderful day.